What AI does for me is it enables the mature industries to relive their initial cycles. I mean, these are industries like vehicle manufacturing or oil and gas, resource mining. I mean, these are industries that made significant return to their investors, but now they're matured and they are just kind of stagnating. AI is letting them live another one of those growth cycles. So this is like giving cash to Henry Ford back in 1920s, when he was just starting.
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast. And today we have Mikhail Taver with us. Mikhail is the founder of Taver Capital. Mikhail was one of the first to invest in AI when it wasn't as popular. The fund has backed 20 AI startups and achieved 4 successful exits. Today, he narrows his focus into another niche, industrial AI. In this episode, we talk about what's Mikhail's story and how he started investing. How can AI help enhance productivity, cut costs, and reduce carbon footprint of heavy industries? How big is the opportunity for industrial AI? How long does it take for industrial AI startups to get market ready? What are some exciting portfolio companies that they have backed? And lots more. So without wasting any time, let's dive straight in. This episode is sponsored by my own podcasting agency called Podcast 10X, where I help VCs start and run their own podcast. While I was running VC 10X, this podcast that you're listening to right now, I asked my VC guests, why don't you start your own podcast? I mean, it's the best form of marketing for VCs. As they say, VC is a people play more than even a capital play. A podcast enables you to put your people at the front, your portfolio founders, your partners, and co investors. It's a great way to build a brand and win competitive deals. It activates all your marketing channels in a single shot, be it YouTube or blog post or newsletter or social media. Everything gets activated in a single shot. And I get the same response from all the VCs that it's a lot of work and we don't have the time for it. I said, all right, let me handle the work for you, from pre recording, editing, publishing to making social media clips. All you have to do is show up on a call, hit record, do the recording using the well researched outline we provide you with, and you're done. We handle everything else. You know what they said? All right, let's give it a shot. So if you are a VC and want to up your marketing and branding game, I'd love to work with you. And if you're thinking there are too many VC podcasts already, remember there are way more VC firms out there. And if you're not standing out, you're losing out. So if you want to work with me on starting your podcast, go to podcast10x.com and book a call today. I'll add the link in the description and show notes below. Look forward to working with you. Hey, Mikhail, so good to have you on the VC10X podcast. How are you doing?
Hi, Prashant. Thanks for having me. Doing great. How about you?
I'm doing great as well. Thanks so much. To start things off, can we have your story and how you started investing?
Well, this is actually something I always wanted to do, and the first time I've sort of introduced myself to the subject of investments when I was about 7 years old, and I read the set of books by Theodore Dreiser that described. Well, I mean, I now understand that I've got maybe about 10% of the book, but I got interested in the concept called securities, right? And I got interested in this and how these seeming, pieces of paper can have such an effect on people's life and companies' existence and so on and so forth. So I got interested into that and just gradually studied my way into finance and investments. And I've been investing as a sort of large private equity investor for some time. Then I went and did a bit of large corporate sort of governance. And then I decided to give a sort of something completely different a go and went for venture capital. And this is something I loved and kept doing for the past, God knows how many, about 10 years. Ever since, I've been doing it happily ever since, and I hope I will continue doing that for the foreseeable future.
Totally. That's a very interesting story there. Tell us about Taver Capital, which is your venture capital firm focused on
Yeah,
investing in AI startups. So tell us more about it.
yeah. Well, yes, I'm the founding partner at Taver Capital. We are probably one of the first funds that declared investing into artificial intelligence back in 2016. Most of the funds were sort of investing in general technology at the time. We focused on AI then, and it was an interesting bet. We acquired a portfolio of about 20 companies, had 5 exits since the start. We were lucky to reach into the top quartile of similar vintage funds by IRR, and we are currently raising fund two. That's this is us in a nutshell.
Totally. So, was it focused on AI startups in general? And tell us more about that. Yeah.
Yes. The first fund was focused on AI startups in general. I mean, they were all very different in terms of the sector, the approach, the business model, but they all had AI as their sort of core competency. It wasn't something that was done just to be there. I mean, it wasn't that popular at the time, so unlike now when putting AI in front of your startups maybe immediately increases your valuation by about 30 to 50%.
Right.
So yes, we decided to go for something niche. That was niche at the time, but with high upside, high investment potential. So chose AI. So our current portfolio has companies from graphics processing to cybersecurity. We have agriculture, sports tech. We have you name it. We have resource mining, and they all have AI and use it in one way or another. So this is the current description for the portfolio. The second fund, we again, I think I'm going to focus again and go for something niche. That is going to be industrial AI. That is AI that is used in sort of heavy, traditionally dirty and slow industries such as resource mining, oil and gas, steelworks, manufacturing, this sort of stuff, the heavy industry, So this is going to be the focus of the second fund. I got one company of such ilk in the portfolio, and this is what actually got me thinking of investing and focusing in this particular niche in the market. I mean, it's just starting. There's a lot of potential there. I'm happy to talk a little bit more on that as we proceed.
Totally. I love your tendency to keep being early on trends that not everyone has jumped on already. And it was AI back in, I think, 2015, 2016. And now it is, since everyone is now on the AI trend. So now you're going even more niche into industrial AI.
Yep.
Right. That's amazing. So tell us more about industrial AI. How can AI be applied to these heavy industries, and how can it be used to improve productivity, cut costs, and even improve the carbon footprints these industries generate?
Yeah. Well, I mean, the first example of a successful integration of AI into the traditional heavy industries was something I saw back in 2017 when a large sort of data science outsourcer partnered with a large steel factory. And how they make steel? They take the basic, in a nutshell, right? A very, very basic. They take iron and then add a powder to it, right? So a ferro alloy powder, which makes steel from the iron. So what they did was optimizing the proportion of that ferrous material to put into iron. So they reduced the amount while keeping the basic characteristics of the steel the same. And this caused a reduction of about 5 to 10% in the margin, which is probably not a lot, but given the size of the operations of the steelworks and the holding that it was a part of, it's reducing the massive saving in terms of money, and obviously this translates into a lot of value to the shareholders. And obviously, you basically use less resources, which is good for the world, for the environment. This is the first time that I kind of faced something like that. I've got a current portfolio company called Earth AI, and these are the guys that use AI in resource mining. They use AI to find mineral deposits. Most of the explorers make one discovery in their lifetime. If they make two, then it is an outlier, and they made two in half a year. The first one was made in last November. This one, the newest was in February, and they are planning to announce the third one already. So I mean, they're doing it, and they are saving costs and time. They do it about 100 times cheaper that's not I'm not mispronouncing. It's 100 times cheaper and a lot faster. So basically, in essence, what they do is they damage the environment a lot less because they know precisely where to look for the samples for the materials and where to look for the minerals. So this is another good example of them basically providing, well, we as a humanity are always going to need, resources, right? This is something we use. So, but what we can do is, do it gently and use those resources gently. And this is what the companies in my portfolio are going to be doing as a sort of, not
Right.
probably as a person, but as a byproduct of the activity. And this is the best thing, they grow in value, they produce improvement for the environment, the shareholders are happy, the planet is happy, and the founders are hopefully happy.
Yes, totally. And tell us more about the underlying technology here and how was AI actually involved? So was there like a heavy set of data that was taken, and then based on that they could identify what are going to be the spots where if we drill down there's going to be
Yeah,
stuff
yeah.
there. Yeah.
Basically, I mean, this is a classic case of a university dropout here.
Right.
Because the founder was a PhD. He was doing a PhD in geology, and he gradually got kind of tired of academics and decided to go for something practical. So dropped out of the university in Australia and manually sort of created. Uh, a data set that and market. Then ran the neural net over Australia to find about 180 data points that his network predicted to be sort of resources. And basically look at the real map, found out that about 70% of the map were actually working miners, which kind of confirmed the hypothesis. And this is the time that when he had an assistant and some an intern that wrote to a cold email to me via LinkedIn, and this is how he got his first investment from my fund. And this money was used to buy his first license. So basically, the business model is we buy a license, we start looking, we find the resource, then we bring up a partner that with our know-how and technology and their resources, we develop this place. And we did that. We now have about 4 partnerships, and 3 of them have found resources already. And we own a molybdenum resource that is something like twice the grade of the currently kind of best place in the world. So one of
Right.
the mines. Yeah.
Yeah. Yeah, that's awesome to learn. And what other industries do you think will be there where AI can actually play a significant role?
Well, the obvious sort of use of AI in pretty much any industries is stuff like predictive maintenance. When AI basically spots the problem before it occurs with the equipment, and just notifies the owner that this block or this thing needs to be replaced in, say, I don't know, 6 months or 1 year. The ordering time is such and such. You need to order this and that. This is something that you can use, in steelworks or in agriculture or at home. I mean, this is an obvious use. There's a lot of things I see in that. There's a lot of opportunities for stuff like Earth AI, but not necessarily for minerals. I mean, you can use for any other resource. I mean, if you train your net on to look for something else, and you've got all these data freely available. I mean, this is all publicly available data from NASA, basically. There's a lot of use for startups like that. There's a lot of monitoring cases where factory workers, you have to make sure they wear the appropriate equipment. You have to make sure they go where they're supposed to go and not go where they're not supposed to go, and you have to monitor that because this is a big worry and cost to large corporations, the personnel health and safety. So there is a lot of sub niches in the industrial AI space. I mean, you can go on forever. There's a lot of use for that.
Totally. And there's one thing that's particular about these heavy industries is that they're not always very willing to innovate and change the way how they do things, right? So how do you think that is going to play out in these new innovations that you're talking about?
Well, I think that the innovations are eventually going to find their way into these industries, because this is one of the few, if not the only one, large segment left that has not been sort of as disruptive as the other ones, as consumer segments, or say as financial segments. And I mean, but it's just starting. It's a starting trend. I mean, I see research now stating that the expected growth by 2030 is tenfold, and it is just starting. And I'm happy to ride this wave. That's the idea.
Totally. And how big do you think this opportunity? And when you're looking at these
Yeah.
different ideas in the initial stages, how are you figuring
Mhm.
out what's going to be the total addressable market for these kind of
Well,
solutions?
I see. Well, I mean, you see, the industry has always traditionally been about the third of the world GDP. I mean, give or take a couple of percent. It fluctuates, obviously, but the order of the magnitude is about this. So, I mean, projected that and projected the current estimates of AI in, say, say AI in manufacturing. I see estimates of about $50 billion by 2030 and $70 billion by 2032. So there's a lot of space there in the market that's just starting, and I always compare this to, what AI does for me is it enables the mature industries to relive their initial cycles. I mean, these are industries like vehicle manufacturing, or oil and gas, resource mining. I mean, these are industries that made significant return to their investors, but now they're matured and they are just kind of stagnating. AI is, letting them live another one of those growth cycles. So this is like giving cash to Henry Ford back in 1920s, when he was just starting.
Yeah, I totally agree on that front. And you mentioned about that company that is now doing very well has already found some mining sites
Yeah,
and is
yeah,
on the way to find more. And you invested in them at a stage when they didn't even have the license, right? So
yep.
how does when you're looking at investment and going in early in these companies, there's not
Mhm.
much to look at based on how the business has already developed and stuff like that. So how are you evaluating, and what is the time to get to market ready for these
Mhm.
kind of companies?
Well, I personally bring a lot of expertise and approaches from my previous career in private equities. So I mean, even if there's nothing to actually touch or feel, we still try to sit down with the founder and build a financial model. I mean, chances are it's not going to be realized at all, but it shows myself and it shows the founder how the business operates. It shows me how the founder understands his business, and I mean, it just provides a systematical view at it. Plus, in previous career, I've done quite a lot of deals. Actually, I did about 250 deals in all kinds of sectors, and a lot of those were in heavy industries. So I have quite a bit of experience and understand what goes on in those startups, because I mean, I see a lot of miscommunications here with the traditional VCs. I mean, just speaking of those Australian guys that use AI to find resources, when talking to traditional VCs look at them as though they were a SaaS solution, right? They ask what their LTV is, what's their customer acquisition cost, which is something you do not apply to geology, right? That's a different sort of animal. So there's a gap there. There's a lot of fish, but not a lot of fishermen there. So this is why I'm thinking of having a competitive opportunity here for me, given my previous experience.
Yes, totally agree. And how do you suggest should VCs be looking at such hard tech and heavy industry innovative solutions? What are the key things to look for in an early startup to evaluate that deal?
Well, I mean, you can just read up a bit on the industries. Yes, I understand why this is the problem now, because this has traditionally been the sectors of attention for private equity firms. But given the state of development, given the upside potential, and given the actual amounts of money currently involved in VC. I mean, it is time for these industries to become part of VC. So, and then you just, apply your standard approaches to see where the value is generated. Try to understand that, there's not always an LTV there to look for. There are other metrics, and just use common sense. As just treat it as a new sector, as any new sector. You just talk to your network. You try to find some experts, which I am happy to have, given my experience in the actual industry. But it's easy to find new network.
Totally. And let's talk about the journey of some of these startups that you have
Yeah.
backed, right? How many years did it take for them to maybe hit their first market ready product? And then how many years for first revenue flowing in? And then at what stages did they get maybe their seed round and then the series A round? So at what stages are these rounds happening?
Well, every company follows a sort of different path. We had a company called named Prisma in our portfolio. We were the first investor when there was basically nothing but a test app on the phone, and they paid a huge multi sort of $1 million dividend last year. You might remember the uh, hype with the avatars back in sort of end 2022. That was that's Prisma's product.
Yeah, I
So
created
you,
some myself. Yeah.
so
Yeah.
so you have those guys, and they gained the first 120 million users in something like in months when they started back in 2016. While you have companies like RTI, they are essentially deep tech, so they need to develop stuff, and it takes a few years before they start making those discoveries. Like any other significant products, it happens gradually, then suddenly. So they follow this curve. It's very individual, but on average, I'd say a company reaches a sort of into hundreds of millions to a billion valuation in about 8 to 10 years. I don't think this space. Yes, you have outliers, but chances are this space is going to continue, and chances are, given the state of environment, we might not necessarily see that many unicorns. But companies in the higher hundreds of $1 million, yeah, they have to be.
Right. Yeah, a lot of traditional VCs tend to stay away from industries like these. And part of that reason can be unfamiliarity with these industries, or maybe they think that maybe the success rate is not that high for these kind of companies. What's your view on that? Do you think that success is relatively harder to find in deep tech industries, or do you think that that's not true?
Oh, I completely disagree with that. I mean, of course, there's plenty of success to be found there. And I mean, it's a good success. This chances are it creates a moat around the company, so it's not that easy to replicate the company. There's a lot of positive additional benefits in investing in industrial AI. It's got a stable demand. It does not depend on like B2C, right? It doesn't depend on whims and fashion trends. If it works, it works. That's the industry. The industry knows how to count money. So if it produces savings, they're gonna buy it. And if you're better than your competitors, they're gonna keep buying you. There's a huge adoption gap, right? Because the companies in this market are generally large, and large normally means they're inert and slow moving. But yes, you have to adjust for that in your planning and financial models. You have to understand that the sales cycle in this industry might be I don't know, a year, 2 year, 3 years, 5 years, but then you land a memo for the client, and this is how this is just how you roll. This is the specifics of the market, and that's a lot of market potential and value creation there, I think.
Totally agree. And while a VC investor is investing in any startup, they are always looking for what will be the way that I'll be able to exit this business, right? So,
Mhm.
what do you think are the typical exit pathways for deep tech startups?
Well, I'm not a fan of IPOs. Always never have been. I mean, I've always said that this is something like a kind of a badge of honor or something that you do once to just to know that you did it, and then you move on to more economically viable and easy to live with paths of. I mean, I've always preferred the sale to a large company, an M&A exit. So this is probably the path forward. And I mean, if they provide a lot of value, so I mean, to corporations, there's always an opportunity to sell those. If they, and this is probably a chance for some of them to become too large for acquisition, then yeah, you can treat them as service companies, like you have, say, Schlumberger in the oil industry. I mean, it's an oil services company. You could gradually become an AI services company, just so much. But that's not the preferred way for me to exit companies. I love M&A, probably my experience talking.
Totally, that private equity background coming in there, right?
Yep.
And tell us more about the comparison of how you were in private equity and how you used to evaluate deals, and now being a VC, and how is it different for you, and which one do you like better?
Well, the main difference is there's not a lot of, well, there's a lot less numbers in the VC. There's a lot more psychology. It's a completely different mix of needs and skills that you need, right? And I love it. Like I said, I mean, there's when you deal with companies from their start, you can change them a lot by applying not that much leverage. I mean, there's a lot of change you can do to the to the vector that they take in their development, and this is what fascinates me. Like in mathematical case, everything very much depends on the initial conditions, and if you change them a little bit, you end up with a completely different distribution. And this is fun, and this is adrenaline, and this creates value for my investors, and I just generally enjoy it.
Totally, that's amazing. And what do you think are the subsectors within industrial AI? There are
Yeah,
multiple industries, like
yeah,
manufacturing is one, there is
yeah,
construction, there is mining, right? So,
yeah.
which one do you think has a lot of gap to fill in terms of innovation and maybe AI coming in to improve productivity in those industries?
All of them, all of them. I mean, I went to an industry in mining back in, that was November last year in London, and I was very surprised to see how the conference went, because I mean, I'm used to sort of high tech investor and startup conferences, where there's a lot of, there's a very lively vibe there. And contrast that to the mining conference, and there's a lot of slow bored people in similar looking gray suits, not really wanting to be there, but okay, there's a lot I mean, to me it meant a lot of upside, right? Because there's a lot to disrupt there, there's a lot to shake them up, and I just loved it. But generally, I mean, this is just one example. I'm sure the if I went to oil and gas conference, or a sort of a metal works conference, chances are it would have looked exactly the same. So I'm sure there's a lot of upside potential in any industrial application that you take. You just go for it.
Yeah, I totally agree. But also, like those gray suit people are probably the people that these founders will need to pitch to and sell to, right?
Exactly.
So,
Yep. Yep.
so
That's the
that is,
challenge.
yeah, that's the challenge there,
This,
right?
this this is where I come in. This is where I come in, telling that this brave assumption of having a long sales cycle of 6 months is not realistic, and you have to pace yourself for for a marathon, not a
Right.
sprint. So this is something that not many founders realize, and this is my job to explain it to them. This is one of sort of pieces of value that I create for them. Because I mean, you obviously have to create value not just to your funds investors, but you have to create value to your portfolio in addition to the cash you give them, of course. Because I mean, you have to generate alpha. You have to generate additional returns, not just spray and pray.
Yeah, totally. And one of the biggest challenges these industries in particular are facing is that their carbon footprint is huge, right? And with the increased focus on sustainability and uh, with with the global focus on cutting down carbon emissions, right? How do you think these kind of solutions, and especially AI, can help reduce carbon footprint of these companies and improve efficiency in all respects?
Well, just as in the examples I gave, I mean, you basically you reduce the amount of inputs used in your production, which has a direct effect on using less resources. You are a lot gentler to the environment when you search for mineral resources. Because basically, you make less holes in the ground to find this, right? So this is essentially another way of saving the environment, and one of the uh, dreams of Earth AI's founder was using his technology on asteroids and other planets. And I was interested to hear that there's a startup on that mining conference, actually. There's a startup that is planning to mine minerals on asteroids. So, I mean, this is another way of not necessarily fully getting rid of pollution, but transferring it to, people-less planets, lifeless planets, or asteroids. So this is one maybe a bit far-fetched as of now in a couple of years perspective, but you never know. There's still another way of saving the environment. Just go to space.
Right. Yeah, the regulations are getting over the top here. Let's go out and mine other planets. Yeah.
Yeah, why not?
Absolutely. All right. My last main question before I do the rapid fire round, and this one is about how do you think about portfolio construction? Maybe you have a reserve strategy and ownership targets, and that sort of stuff at Taver Capital.
I normally invest not a large amount. I mean, I come in with a small check to see how the company does, how the founder performs according to, I mean, given what he said to me, and how we sort of interact and how responsive the founder is. Because I mean, even if the company is great and the founder is great, if something doesn't click, then there's not a lot of value I can create to the company, and that's not something that makes me happy. Because I mean, I like generating value. And if things work out well, then I'm happily investing a larger amount at the further rounds. So say pre-Series A or at Series A,
Right.
and then see where that takes us. I try to add value to the company, no matter how big my share there is. I'm always in touch with my founders. We always have calls every now and again. We're always speaking messengers. I try to bring as much value to the portfolio as I can.
Totally, that's amazing. Now let's do the rapid fire round, wherein I'll ask you 5 quick questions about the investing that you're doing,
Hmm.
and you have to give 5 quick answers, right?
Okay.
So the first one is, what are the sectors and regions you invest in?
I am region agnostic. I am currently focused on AI in heavy industries.
Great. What's the typical stage of investment?
I prefer something around seed stage where you have something to, other than just, two eyes and a piece of paper with a PowerPoint on it, but
Right.
something to, to touch, something I could show to my expert network to evaluate.
Right. Totally. And what's the typical check size you put in?
I'll start with, I mean, in the current fund, the plan is to start with a initial check of 3 million, and then increase to up to about 10 per company. But this is going to be staged according to milestones. So, I
Okay.
make sure that, the company does not have a capital shortage, and they make sure they perform according to what they said in the initial pitch.
Totally. Last one. Where can our listeners go and follow you?
They can find me on LinkedIn. They can find me on Facebook. They can find me on Twitter. They can follow the fund. They can follow myself. They can Google me, and I'm always open to any channel of communication. I always read all the incoming mail, messages, you name it. I might not always answer, but I always read it. That's for sure, guaranteed.
Totally. That's awesome. I'll make sure to put all those links in the show notes below.
Yeah.
Thanks so much for doing this with
Thank
us,
you.
Mikhail. And I wish you all
Thank
the
you.
best.
Thank you, Rashan. Have a great day. Thank you.
Thank you.